All right, all right. I hope you all are seeing my screen. Okay, great. Top three technical analysis indicators you must know. Top three technical analysis indicators you must know. Very, very important. Very important. Top three technical analysis indicator you must know. Okay, now, firstly, it's very, very important that you know the function that technical analysis does. Technical analysis helps you to make good trading decisions. You make your trading decision based on the analysis that you've done. If you want to make proper profit in the market, you need to know technical analysis. It is very, very important that you know technical analysis. So now tonight we are going to be looking at three most important technical analysis. We are going to be looking at three most important technical analysis. Now, here on Crypto Based Media, we give you all important updates. We give you all important updates here on Crypto Based Media that is going to make you profitable. My name is Rock, and then I'm a cryptocurrency trader and also a technical analyst for cryptocurrency. And then I'm also the content creator for Crypto Based Media. I know the most important technical analysis indicators that you need to know. Just three most important. So the first one is going to be RSI. Relative Strength Index. For those that don't know what RSI is called Relative Strength Index. Now, RSI is one of the most underrated tool out there, and I guess it just points it out when it is right to buy long or when it is right to sell short. It is just very important. A lot of people just overlook all of these technical analysis indicators. If you are trying to make it complex for yourself and then you say the RSI is too simple or something, and then you head out to look for a more complex technical indicators, at the end of the day you might end up not getting it right. So if you are the type that you've abandoned RSI before, it is better that you get back to your RSI, plot back your RSI on your chart. Now, it's very important. Now, this is how you can interpret RSI. Basically, interpreting RSI, it means you knowing the most important values in the RSI, you knowing it in your chart. And for this sake, I'm going to be sharing my screen with you, and then I'm going to open my TradingView app right now. And then let's look at one of the important coin, Bitcoin, as the mother of all cryptocurrencies. And then I'm going to show you exactly how to plot your RSI properly. Okay, great. I have my RSI on this chart already, and currently this is Bitcoin US dollar trading at $21,050. Now, basically, you need to know most important levels in the RSI and then what they represent. You need to know the most important levels and what they represent. Now, the first one you need to know is 30. We have three most important levels. They are 30, 50, and 70. Now, the 30 means a coin or a market is oversold. When the value of the RSI is at 30, it means that it is oversold. And when it is at 50, 50 represents that it is average. And then when it is at 70, it means it is overbought. Now, let's quickly look at this on the chart now and see how this looks like on the chart. Now, I'm currently on Bitcoin US dollar on a 4-hour chart. Now, you can see the RSI right here. The RSI is at 24.64. This purple line right here, below here is the RSI. The RSI is at 24.64 and then still fluctuating around that side. Now, this means that the RSI is below 30. And whenever the RSI is below 30, you know that the coin or the market is definitely oversold. So that is it about RSI and then knowing the oversold region. If you want to know whether a coin is overvalued or the coin is overbought, or a lot of people have bought the coin, and then the coin might start dropping, or people might start taking profit, then you can see it when the RSI is 70 or above 70. It is 70 or above 70. Like for instance, if you are still seeing my screen right now, you are going to see this particular place where the RSI peaked at 73 and then it started to dump from there. So these RSI are just obvious indicators for you to know, for you to see everything that is happening in the chart. You know, if you know all of these indicators, you are definitely not going to make mistakes in the market. You're not going to make mistakes. It's just like the market is communicating to you, and then you interpreting that kind of communication just with indicators and the right knowledge that you need. So the average, when the RSI is in average, you can say, okay, it is good. You can either buy long or sell short. So definitely you can use this RSI to determine your signals, to determine your buy and sell signals. You know, you can also use it for a backup. You know, one indicator is not enough. One indicator is not enough. It is very, very important that you combine them together, maybe with your analysis, with your support and resistance, levels to levels, and all of that. Then if you take your trading decisions with these indicators, then you'll be very, 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 very good. You'll be very, very good. Now, the next indicator I want to show you all tonight, is called the moving average. The moving average. The moving average is also very, very important. And let me tell you, moving average performs a lot of functions. Moving average performs a lot of functions, you know, from telling you sometimes when there is an uptrend to telling you sometimes when there is a downtrend. So the moving average does that function also for you. The moving average does that function also for you. Now, this moving average, we can have them set in different values, in different day values. You can have a 50-day moving average, you can have a 20-day moving average, you can have a 100-day moving average, you can have a 200-day moving average. So what is about these moving averages is that there are some that there are shorter day moving averages, and then there are some that are higher day moving averages. So that is it. Very, very easy to understand. Very, very easy to understand. So guys, let me know. I hope you are enjoying this session. Because there is definitely still more to dish out. The averages, as I was explaining, the moving average can also help you to determine when to buy and when to sell. You know, the moving averages are crossing each other, especially when you plot two together, or when the moving average is serving as a trend line for you, a downtrend or an uptrend line. A moving average that can serve as a trend line for you is a 100-day moving average, although it won't be as straight as your normal trend line, as the normal straight trend line you draw, but at least the market bounces off at this point. And then this is another very important function of a moving average. You know, a moving average can be used to determine whether a market is currently in a bullish phase or a market is in a bearish phase. If I go to Bitcoin US dollar charts right now, and then okay, I'm going to head over to my trading view. Okay, and then Bitcoin US dollar on a weekly time frame. Let me just use this my normal charts. Okay, the network is so slow right now. Okay, here we have it. So on a 1 week time frame, when we have our moving average, set to a 200-day, we have our moving average set to 200-day moving average. It can help you determine when the market is in a bullish phase or in a bearish phase. You know, these are things that have been happening before in the market. You know, that is why it is technical analysis, using past price action to determine a future price action, to determine what the markets will do in the future. Now, as you can see clearly here, when the price is above the 200-day moving average, the market is in a bullish phase. But anytime the price comes below it, you can see that the market is going to do otherwise. Like what we have presently here, the price is currently below the 200-day moving average, and that means that we can say that okay, the market is still in a bearish phase, but we can start a bullish phase as long as we stay above the 200-day moving average. And that is why here analysts saying and predicting that we'll be looking at the 200-day moving average. I can remember an analysis Crypto Pastor did, I saw it on the group just this evening, that the bulls only have the weekend to know whether we are still bullish or we are still bearish. The bulls only have the weekend to know whether we are bullish or we are bearish. You know, if this particular candlestick closes above or above that 200-day weekly moving average, then we can say that the market is bullish. If it closes above the 200-day moving average, we can say that the market is bullish. But if it continues below, then maybe the bearish scenario still continues. So these things are very, very simple indicators. They are very, very simple indicators that help us out to know when to buy and when to sell. You know, the most important thing to know, you know, to make proper trading decision. So for you to plot your moving averages properly, you can do that by simply, I don't know if you've seen me done that before, but you can do that by simply clicking on the FX. You are going to search for moving average right here. You click on it and then you come back here to set your values. So you can set a 200-day moving average, you can set a 100-day moving average, a 50-day moving average, or a 20-day moving average. Very, very easy to do. So you just have to click on settings and then come to inputs, then select the value you want right here. And then a moving average can also serve a good function for you when they are crossing each other. Like for instance, when we have a shorter day moving average and we have a longer day moving average, you know, it is very important that you know these things. What is important is that when the shorter day moving average crosses the longer day moving average and stays above it, you can say that the market is a bullish market. You know, we can say that the market is a bullish market. But when the longer day moving average is above the shorter day moving average, like it is right now, you can see that like it is right now, we can say that the market is bearish. You know, the condition is bearish. So that is that about moving average. You know, consistent practicing is going to put you in the right path. Consistent practicing will put you in the right path, and then with time you are going to master and make use of all of these technical analysis indicators. So now the next one we are going to be looking at, is how RSI works. Okay, I've talked about how RSI works. Okay, now MACD, moving average convergence and divergence. If you've not done the screenshot of this before, you can as well do it now. This is how the RSI works. This is how RSI works. We've talked about how moving averages also work. Now, let's look at the MACD, the moving average convergence and divergence. Now, the MACD also is a signal that is going to, or should I say, is an indicator that is going to interpret to you the right time in the market. You know, the right time to take your buys and the right time to take your sells, the right time to take your longs and the right time to take your shorts. It is very, very important. Now, this moving average convergence and divergence, it at least going to pave the way for you and show you a clearer signal. You know, more than two moving average crossing each other, like I explained earlier, and then I'm going to show you exactly what that means right now. Okay, let's take a look at this Bitcoin US dollar charts. I'm going to be switching off my moving averages now and plot a moving average convergence and divergence. Okay, you come here to your FX and then you search for moving average convergence and divergence. That is MACD, simply MACD. So guys, these tools are there for you for free, or for you just to make use of and to make good trading decision. So basically, the moving average consists of the moving average convergence and divergence, the MACD, it consists of two exponential moving average, two EMAs, which is basically the 26 and the 16. So these values you see here, just like the one I explained earlier, when the shorter day crosses the longer day, the market is bullish. You know, the condition is bullish. You can take longs at that particular time, you know, combining everything with other indicators and other technical tools, very important. And then once the longer day crosses the shorter day, you can see that the market is definitely going to be bearish. So that is how it works, guys. That is how it works. Remember, these things don't work alone. You must combine them with your analysis, with your trend lines, with your support and resistance, and then with other indicators that you know. It is very, very important. You can see the moving average convergence and divergence is a very, very easy indicator to use for you. So let me come again. Now, these indicators, they are very, very simple to know. The RSI basically gives you level. You know, the 30, the 50, and the 70 tells you whether a coin is overbought or oversold. You know, It also shows you, Tochukwu, you can mute your mic now, please. You can mute yourself so I can have a smooth conversation. All right, so the RSI basically shows you when a coin is overbought, so that you know that this coin, it's my dumb, people might start taking profits. You can also know whether a coin is at the average, whether it is safe to buy or sell, and then you can also know whether a coin is oversold. You know, whether you can say you want to buy, maybe the coin is undervalued, and then you say you want to buy. Now, the MACD basically is a moving average convergence and divergence. And basically, I think what is confusing a lot of people about that is the convergence and divergence that is there. It is very, very simple. Convergence means when something comes together, you know, when they come together, you know, when they meet, when they converge. And then divergence is when they separate from each other. That is what it is. And anytime these are moving averages, exponential moving averages, the 26 and 12, anytime they converge, what happens is that the market is going to be bullish. And anytime that they diverge from each other, the market is going to be bearish. It is very easy. Now, I'm still going to be showing you that my shared screen. Yes, on TradingView, that my shared screen on TradingView, just for you to understand it more. So you don't need to set any values or do any stress in this. Everything is already set for you. You can see it's 12 and 26, EMA. They are both EMAs, exponential moving averages. And anytime these 12 and 26, once they cross each other, I'm very sure that the 12 is the blue line and the 26 is the red line. So once they converge, you see a very green area in this aspect. You're going to see a very green area. So taking along with combination of other technical analysis indicators or other analysis that you've done on your own will make a lot of sense, and then you'll be making profits. Just imagine that once this thing cross at this particular time, and then you've made your analysis, you've seen that this place is a safe buy, you know, you took your long from here or you bought your coin from here, you know, at exactly 42,362, and then you take a sell around here, maybe when you're okay with your profit around 60,000, or even if it is 50,000, I'm very, very sure that you'll be making a lot of profit with that. And then you can see right here where these two indicators, the EMA 26 and 12, you can see where they diverge here, and you can see the red on top of the blue. That shows you a red signal, you know, that shows you a sell signal. That shows you that people are taking profit. And then if you are going to be short selling, it is going to be a nice time for you to short sell. Now, I hope you understand that about the moving average convergence and divergence. Now, I'm going to be unmuting someone else to talk right now. Okay, Eddie Grams, you can ask your question now if you have any question about tonight's session.
Okay. I said, can you use only one of the technical analysis there to get a better long, short, or sell, or buy? Can you use only one of it?
All right, I get your question. Now, your question is that can you make your trading decision based on only one? See, the thing is that these indicators, they work together. For you, you know, there are sometimes nothing is perfect. You know that nothing is perfect. So there are some times in which only one indicators won't work for you. You know, your RSI might be signaling that you should sell the coin, or that it is enough, you can take profits, and then other indicators might be telling you something else. You know, other indicators might be telling you something else. That is even why we are telling you the most important ones that you should know. You know, the ones that people use the most. That is why we are telling you this. So it doesn't make any sense if you only use one. If you are going to be using a technical indicator like a MACD, or you're using RSI, you can combine it with your analysis on, let's say, your support and resistance, you know, or your levels to levels. You know, once you see Bitcoin breaking this level, and then you feel, okay, since Bitcoin has broken this level, I think maybe the next point is down. So maybe Bitcoin is going to go down more. You know, your MACD might be telling you something else. That is why at least you should combine the two together. You know, combine 2 or 3, and then you'll be fine. Combine 2 or 3, and then you are going to do whatever you see that the market interprets, or what the market says to you. Do you understand this now? So using one alone is not enough. I'm not going to lie to you. Using one alone is not enough. But that doesn't mean that you should have up to 5, 6, 7 indicators on your chart. That is going to confuse you totally. And you don't have to draw a lot of lines on your chart before you can make right trading decisions, before you can make right trading decisions. So that's how our signals are being placed. You know, just using all of these indicators that we talked about, using all our levels to levels, our support and resistance, and using them to trade, using them to create signals, and our members making more money, on our signal room. And this particular recent dump that just happened to Bitcoin, when Bitcoin dumped at exactly, I think, 23,500 or so, I can remember that Crypto Pastor made that call, and then we all followed that profit to the bottom. We all profit from the market downturn. This is the most important thing that you need to know. Profiting from either movements of the market. I'm trying to search that particular trade signal right now. I don't know. Okay, here it is. This was August 18. Very, very clear. Entry, short BTC 23,500 to stop loss 23,772. You take profits when you're happy. And then the profit was overload. Honestly, the profit was overload. You get to know all of these things when you know how to do things right. When you know how to take your trades the right way. When you know how to do your analysis. If you want to know how to do analysis like this, it is very important that you take a crypto trading course. Now look at this. With just $64, look at the profit that has been made. And this is not even all. The profit still increased to, let me say, was it up to more than $400? It was more than $400. The profit was more than $400. It was very, very obvious. Here it is, guys. It is this same trade that had a 721% ROE. The unrealized profit was $426, just with a margin of $65. Entering a trade with $65 and leaving with profits of more than 700%. That is how it is when you know how to do your analysis, when you know how to place your longs and shorts based on the analysis that you do in the market. It is very, very important that you know how to do all of these things, and we can show you how to do them when you take our online crypto trading course on Crypto Based Media. And if you are very, very serious for that, you can message Crypto Pastor or comment to the broadcast message that will be sent into this Telegram group right now. Just send a comment, and then we are going to give you the link to purchase the course, and then to also enjoy profits like our members are making here on Crypto Based Media. So thank you all.
Yeah, my name is Crypto Pastor, your billionaire friend, the tormentor of the village people. You all know that, before coming into this crypto space, you have to remove the mentality of short term. You have to start thinking long term. Remove the fact that, I want to double my money in the next 1 month. I want to double my money in the next 2 months. No. Be more of how far can I go with this in the next 6 months. Start like this, first of all. How can I earn $1? How can I earn $2? How can I earn $3? If you can do that, you cannot proceed to how can I earn $10, $20. Don't go and look for the fast way out. There's no shortcut in this space. There's actually no shortcut in this space, okay? You have to follow procedure. I've been in this space for 5 years. I know how it works, okay? So I'll advise you, the current market condition is not something you just jump into anyhow. If there's no setup, there's no setup, okay? Like I always tell you, there'll still be 1 million trades. Trading is 80% patience, 20% execution. Spend 100% of your time to getting better with that. In fact, patience is key in this space, okay? The market would always come to you. Just wait for the market to always come to you. You don't have to trade the market. Let the market come to you. And your trade should be a small win, a big win, a small loss, or that's how you should trade. Small wins, big win, and small losses, and learn to cut losses quickly, okay? When the trade is going against you, cut your losses quickly. It's not by the particular indicator. The indicator is saying this, the indicator is saying that. We are all students of the market. So if the market is against you, you cut your losses quickly. Okay, so once again, my name is Crypto Pastor, a billionaire friend. Before I stayed on a trade, or before we stood on a trade to make 7%, I've already started locking my profits since 10%. If you don't know peacefully. before I got to 700%, I've been locking from 10%. I lock profit to 20. You might not understand what I call lock. Lock profit means trailing profit, using stop loss to trail profit. I locked my profit. I know that's why I say patience key. I locked my profit from 10 to 20 to 100, knowing I actually saw where the market was going to. So, but more of like me locking my profit so that I can make profits. You understand? I can secure my profit before the market goes against me. But unfortunately, the market did not go against me, and I made a lot of money. So that's just it. So you see, patience is very vital in this space, and also execution is very important. If you have done your setup, you have applied all the indicators you think you're good at, and you have done your setup, put your stop loss, manage your risk properly, and allow your trades to play out. Don't be scared. Allow it to play out till it hits your stop. See, the game here is to me now, how I trade is either the trade hits my stop loss. Is that ITP or ISL? In both of them. It's either ITP. There's nothing the market can do more than that. So it's either ITP or ISL. That's the highest the market can do to me. So once I've put in my trade, taking my setup, and that is all. Oh yeah, the market should do what it has to do. So market, how are you doing? Is that I give me my TP or you take my stop loss? You choose one. So, and again, in this crypto space, I think you need a little bit of luck. Do you understand? In the sense that it won't always be rosy, okay? But what I mean by luck here is that it's your consistency and persistence that means luck. You can't luck will not just come to someone who is not doing anything, who is never making progress, okay? So consistency is what means luck, okay? And let me tell you the truth. I know I did my analysis well at 23,500, that I got about 700% profit, got about $400 plus. But I won't tell you that I knew I was going to make that amount. No. This is just my consistency. In fact, that was my payday. We call it payday. This is my consistency meeting luck, okay? Nothing is certain in this space. We're in a market of probabilities, okay? So we just have to keep doing what we know how to do, keep managing our risk, and definitely all your efforts will pay off. So I think we'll be ending the meeting from here. So
you right away. So thank you all for attending our session tonight. We are going to come up with a more interesting and more profitable topic next week, Saturday. So see you all next week, Saturday. Thank you for attending.